Get started. Welcome to the first recap webinar of the Urban Tower Scalping strategy. This strategy was actually released by me in 2009, and since then it's been on every major Forex forum and publishing on the internet, and with 5 stars across the board on every single forum. Now, many of you guys are fans of the strategy. Some of you guys are actually just members of my social network, which is at urbanforex.ning.com. And some of you are just new to this, probably saw an advertisement and just walked in. So let's get started on the strategy. Let me first go over the strategy. There are several pairs I look at, and let me load up the charts. For those of you who do not have this rainbow indicator that I'm putting up right now, you guys can get it on the forums page on urbanforex.ning.com. Under the forums, when you come up to the strategy, it is towards the bottom of the page. Below the video, you will see the zip file, which is the indicator. If you do not know how to use the indicator, please let us know in the chat room. Somebody is more than happy to help you get that installed. Okay, so let's load up our charts here. We're going to go through what happened the entire last week. Before we do that, we're going to go through the strategy completely in case some of you guys have been trading this wrong or got the wrong impression of the of how this works. Okay, let's take a look. We have more members coming in right now still as we speak. Let's see. Sorry, there we go. And let's put this on gold too. Let's take a look at gold. I've never looked at gold, so let's take a look at gold with this as well. Okay, now this strategy, I personally really dislike indicators, as you guys have probably known from all of my previous webinars. But the way I've created this strategy is we're combining price action with a moving average. Okay? Now what we're doing is I've put together several moving averages, and with these moving averages we're looking for a price action to happen around these lines. Now what this means is, let me show you an example. Okay? Let's go down to the 15-minute chart. Let's take a look at let me see if I can get you a clear example. Now, it is recommended to use the 15-minute chart if you guys are scalpers. Otherwise, the 1-hour chart is obviously ideal for this strategy. Now, what the strategy basically does is we look for a trend. Now, once you see these MAs expand, you see how it's contracted here? It's all together and really tight. And you can see over here it is getting wider and wider. Okay, let me get the questions open in case there are questions. I can see them. Okay. All right. So, once they get a little bit wider, you know that there is a trend in place, and the trend is going with the moving average. What we want is a retracement from the market, which is something like this that we see. The market goes back up, and it goes and it touches our MAs. Now it can touch anywhere, any line, it doesn't really matter. As long as the chart does not close, the candle does not close on the outside. Okay? And what we're looking for is 3 consecutive highs. Okay? Now when you have a downtrend, we want the market to retrace upwards. You want to have a higher low, which is right here, another higher low, another higher low, and we have another higher low. We need at least 3. Okay, once you have 3, you take the highest low after the touch, and you want the break of that line is when you enter. So if we take this one by one, we've had a higher low, higher low, higher low, and we've actually even had a touch. So on our next candle, we've had a break right here. That's when we enter our short. Stops at the tip of our our candle that touched the moving average, That's where your stops would be, and you would be taking it short from here. Okay, you can use 1:1 ratio. You guys can use any exit strategies that you guys like. I have an intern who blogs this every single day. He's been doing it for the past 6 months, and his blog is also available on our social network. It's also available on WordPress, and he does a 1:1 ratio, and he trades with several different pairs, and he averages anywhere between 50 to 100 pips in a day. Some days good, some days bad, obviously. Okay, I see there is a hand raised. Any questions? Let's go over the questions if there is any so far. Karen, hi Naveen, first time on the live webinar. Thank you. You're welcome, Karen. Welcome to the room. Properties of the MAs. Okay, I do not have the properties of the MA as I pulled it out of another system and I looked at this indicator and it looked really nice. You can get the indicator on our website, which is urbanforex.ning.com. Here it is on top. And you can just go onto the forums, and once you find the strategy, or you can search for it on the site, right below the strategy, below the video, is where you will see the indicator file. Bede, you said you cannot see my cursor. I don't know if you can, can't see your screen correctly. Okay, looks like my cursor has stopped moving, so let me refresh my my screen once again, real quick. Okay, let's get rid of all these questions. Okay, but Steve says lagging really bad, wondering if it's just me. Just want to confirm with all you guys, can you guys hear my voice at least clearly, or is it just my screen that's having little problems? Okay, I'm going to reload the screen just now. Just a moment, please. Okay, let me know when my screen does come up and once you see my mouse moving again. Is up now for Karen. My name pronounced bead, like around the neck. Okay, bead. Okay, great. Sorry about that. So we will keep that in mind, bead. Theory, it's working now. Screen's up. Mouse is good. Moving. Yes, the rodent is moving now. Okay. All right, here we go. So let's continue now. Now, we see that the market, we want to have 3 consecutive highs once it reaches our moving averages. Once the touch happens, you want to create a line just below the candle that did the touch, and then you see, do we have at least 3 consecutive towers? This is how we got the towers. We have 1 tower, we have 2, we have 3, and 4. You can see how it's slowly moving up. If you take the trend line and you put it from the bottom and you connect the lows, you can see it's heading upwards. Okay? Once this happens and it bounces from the MA, we enter short at the cross of the lowest at this line right here, the break of the low of the candle that touched the moving average. We enter low, and you can start with 1:1 ratio or any other exit strategies that you like. Now let's continue down. Let's look for another example, and I'm going to start explaining different techniques, different methods. I'm going to explain how to use your stop losses. We're going to explain how to maximize your profit, because many of you guys who are trading this, you're getting 5 pips, 10 pips out of this, which is fine, but it's not worth it to get into it for 5 pips, 10 pips. If we're talking about 50 pips, 100 pips, then we're talking business. So I'm going to teach you guys how to do that with the same exact thing that you're seeing on your screen, just how to multiply your pips, not your lot size. Multiplying your lot size is the wrong thing to do. Okay, so now, bead, you're asking what is a tower. It is basically a candlestick that is approaching the MA. We call that the towers. Consider this, the MA, as the sky. Okay, on this particular one, the market is in a uptrend. You can see that the MAs are quite open. They're not too congested. They're quite open. The market touches the MA on this particular candle to begin with. So once that happens, we want to see, is there 3 consecutive highs on this one? On a downtrend, we look for highs. You see this is the highest tip right here. This is the next highest tip. It's a little bit lower. This is the next highest tip. It's even further lower. We have 3 now. 1, 2, 3. Once it touches, you want to keep your line at the tip of the one that touches the MA. We want to wait for that break. So the next candle opens up. Did it break? No. But have we closed outside the MA also? No. So we want to move this line down to the next candle to get a even more precise entry. Now we have another candle that has touched the MA but has not closed on the other side. So at the break of this line, we are going to enter long. Okay, we enter long on this particular line right there. And our stops can be on the other side of the MA or the tips, like most people usually do it. And you can go for a 1:1 ratio, or obviously any other exit strategies that you like. The strategy is really pretty good in terms of filtering out bad trades using these MAs, and you guys can get even better if you add additional pairs to it. So before we continue into the additional pairs, I just want to make sure everybody is on track right now based on what you guys are seeing. Does everyone understand how the strategy works? I know many of you guys are previous members of the strategy. Okay, so Jitesh is asking, so is it okay to enter on moving data? No. Yes, actually yes, you will be entering on moving data on this one, but you guys are using a closed candle to determine where you're going to enter. Okay? So you guys will already be placing your orders, your entry orders, before the next candle even opens, or when the next candle opens. Okay, Steve, so far so good. Andrew, you want a quick summary? Okay, we'll do a quick summary. And Karen saying, so Naveen, we would enter on the break of the yellow line in the trade you were just talking about. Yes, at the moment the yellow line is broken, you would be going in a long. Okay. Okay, so let's go through a quick summary. We'll go through another 1 or 2 examples, and then we'll get into the little bit more advanced methods on how we can maximize profits and take it from there. Now, we're going to go through a good trade, and we're going to go through a false trade. Okay, and so you guys can know what is the difference. Here is a good trade we're looking at. We see the market is in a downtrend. The market starts to retrace, starting from here. Starts to go up towards the MA. Which one touches the MA first? None of this touches, right? This one doesn't touch, this one doesn't touch, this one doesn't touch. Bam! We have this last green candle that's touched. Okay, first thing you need to ask yourself, has it crossed and closed on the other side of the market? No. Okay, which is a good thing. Okay, do we have 3 consecutive towers to reach this area? You can see that there was a lowest here, and then a higher low, and then a higher low. We have at least 3 now. Okay, another check. Okay, and is the MAs congested? See, the MAs here are a little bit opened up. You can see through them practically. But can you do that over here? No, it's too congested. You can't see through each MA. Over here you can. So all things criterias match. Once we have our first touch, we keep our line at the lowest point of that candle that touched the MAs. Okay? This candle now closes. We have our entries to sell at this yellow line. The next candle closes. Has it touched? No. Has it crossed to the other side yet? No. Are we still creating additional towers? Yes. So we move our yellow line to the lowest point of the next one. So you're moving with the market, if you catch my drift. Okay, let's put this line here. Okay, and suddenly the next candle opens. You can keep your stops at the tip of your candle that touched the market first, or the highest point, or you guys can use the particular candle that broke through. You can keep your stops there for an aggressive stop, and you're gonna be entering short on this particular trade. You're going with the trend. Okay, you enter short at this yellow line down here, and you're going for a 1:1 ratio or more. So majority of the times you will book profits on this particular case. Okay, now we've gone through a good example. Now we're going to go through a example that would not work. Karen's saying, so we could put it in a pending order. Yes, as soon as the candle closes, put it in a pending order. Steve, so are you saying do not take the trade if the MA is congested? Yes, do not take it if it's congested. If you are taking it when it's congested, it's considered an aggressive trade. When it's congested, you're most likely in a sideways market. So this will help you filter the sideways market momentum. Okay? So do not trade in a congested MA. Okay, let's continue here. Okay, now here is an example of a trade that did not work. Okay, now when I say did not work, does not necessarily mean a loss. Okay, let's take a look. We have our MAs over here. You can see they're not congested. We can look through them. They're nice and beautiful. And we have our candles we see starting to retrace. Okay, we have one, we have two, and actually we're starting to have a touch now. 1, 2, 3 right here. So we put our entries right here, and we want to sell at the break of this. Okay? Has the candle crossed outside to the other side of the MAs? No. Have we have at least 3 towers? Yes. We have a low, higher low, higher low. We got 3 now. Okay? That's also a yes. Okay? Is the MAs not congested? Yes. It's clear. So we have our entry placed. Now, next candle, same situation. Everything is a yes. We trail it. Still, it did not cross through, it did not break. Now we have another candle. Now the situation has turned. We have closed onto the other side. Okay, the candle has now closed onto the other side of the MA. Now the trade is void. You end up not entering this trade whatsoever, nor do you take a hit, because you know now the trade is voided because the candle opened on the other side. Now, looking at this, is this system perfect? No, it's not. You will have some losses, of course. Nothing is perfect. But just to be on the safe side, if you watch for the congestions and if you keep these rules in mind, it will help you filter out bad trades. Okay. Now we have questions. Let's take a look at this. Does the colors matter? No, the colors do not matter. Treat the MAs as one. Whether it's green or blue does not matter. Treat the MAs as one. Okay, and let's pull up the questions. Valdemar, I think you had a question. I see your hand up. Where is my question box? There we go. Okay, Ned, that's a good idea. I mean to show us bad examples so we know what to avoid. Yes, Ned, I will show you more bad examples as we scroll through the charts. Right now I'm just showing you guys one single pair. Okay, can we take hammers or shooting stars into consideration? Yes, Wasim, you guys can take any formations on or around these MAs. Obviously, if you have hammers around these MAs, even it's perfect. For example, the trade that we just looked at earlier, which one did we look at? This one right here. Nice hammer formation, exhaustion candle, or a pin bar, whatever you like to call it, gives you a heads up that okay, market is going long no matter what. You know, it's just a sure shot. So there are several examples like that. So yes, you guys can take it into consideration. Now let's continue on here. Okay, Andrew, what are the MAs? Exponential or simple? Honestly, Andrew, I do not know. You might want to check with some of the people on our website to ask them in the chat room, and maybe they might be able to open it up and find out the MA settings for you. But the MAs are the indicators pretty much ready on the site. You just need to download it and put it onto your screen. I've not really opened it up to look into it in detail. So let's continue here. Now let's move further back. Let's get you one more example. I'm going to ask you guys if this is correct or not correct, and you guys will let me know. Okay. Now this particular one. Okay. The candle has touched the MA. Do we have a trade here? Are we going to go long at the break of this? Yes or no, and why? If you guys can let me know. And then we will go over it. We're going to give you guys 60 seconds to answer this question. Okay, Sonia says no. Okay, correct. Valdemar says also no because there's 2 towers only. Very good. Okay, no, there are no three towers. Bede, actually it's a no. We'll go through it why. Andrew, no. Wasim, no. Tony, no. Karen, okay, we'll go through it. Okay, okay, so most of you guys got this right. Few people, just some questions, not a problem. Okay, let's write this down. There's three criteria we need to look at, and only three criteria. Yeah? Let's write this down, and let me increase my font size. Okay, one, we need to check for, is it congested? The MAs. Next thing we need to check, do we have three highs, three higher lows, or do we have three lower highs? Okay, it can be a little confusing here, but I'll explain that to you. And finally, do we have, did the candle close on the other side? Okay, these are the things you want to look at first. If any of these things are incorrect, trade is voided. Okay, so let's go through this. Is the MAs congested on this? No. So that's a good sign. That's a good thing. You know, we'll call this a plus. Do we have three higher lows or three lower highs? Let's count. We have one, and then we have two. The one previously is not in a trend, so that makes it invalid. In a downtrend, you're gonna have three lower highs. Okay, this is for a downtrend, and this will be for an uptrend. Okay, don't worry, you don't need to write this down. I will have this video recorded. It will be up on YouTube and the websites, everywhere you can think of, it'll be there. So yes, this is an uptrend, this is a downtrend, and did the candle close on the other side? No. So from all these criteria, one of them was incorrect. So this all in all would be an invalid trade. Now, moving forward, let's take a look. Let me minimize this. I'm going to ask you guys one more question, also 60 seconds to answer. Is this a good trade? And trade number two, is this a good trade? Trade number one, let me know what you guys think, and also trade number two, let me know what you guys think. Okay, Valdemar, aggressive trade, good, good. Bede, Klux, Steve, there are only two candles in a row. Okay, Sonia, good. Totally yes. Number two is also yes. Trade 1 and 2 are good. Valdemar says yes and yes. Wasim says trade 2 is good. Bede says no and yes. Steve says trade 2 is good. Floyd says trade 2 is good. Andrew says 3N. Okay. Now, to answer this question, trade 2 is obviously good. That is correct. Okay, trade 1. Okay, let's take a look here. Trade 3 is correct. Let's go through trade 3 first, and we'll go through trade 2 afterwards, because trade 2 can be a little bit tricky. So we'll go through trade 2 in a second. Trade 1 in a second. Let's take a look at this one first. Let's get rid of this. Okay. Where do we have our first touch? We're going down, and we have our first touch here. Are we congested? Let's go through these questions. Are we congested? No. So that's a good sign. We're in a downtrend, so downtrend means this one. Do we have three lower highs? Let's take a look. On its way down to here before it touched, we have one high here, a lower high, another lower high, another lower high. Okay, now we placed our entries at the tip of this on the high side. We want to break above this is a long. So this candle closes and the next candle is running. Now this candle closes. Still, we haven't had our entry yet. What does that mean? We go through all the criteria again. We're still touching the MA. We haven't crossed outside. We're still having more and more consecutive towers. So we move our entry even tighter. Now we're down with here. Our stops are now placed at the tip of our recent touch. And you can see at the break of the next candle, we are now long. We are going long for this trade. And the trade did go long in our favor. If you had a 1:1 ratio, there's nothing stopping you. Okay, so in this particular trade, yes, we went through. Now let's take a look at the first example. we had our first touch over here. Do we have three consecutive lower highs? Okay, we have one, and the second and third one, a lot of you guys said they are the same height. Here's the thing. When in doubt, leave it alone. Okay? This trade was perfect, but when in doubt, forget perfection. Leave it alone. Do not trade. It's not worth risking your money over it. Okay? Only trade when you are certain. And don't think that if you miss this trade, you're going to miss a chance of a lifetime. No, it's not. That's not the case. There's so many pairs that you can trade this with, and there's so many opportunities every single day. So never stress on, am I going to miss it? Am I going to miss it? Am I going to miss it? You will not miss it. Okay? So again, when in doubt, leave it alone. Okay, so Steve, trade one is good. Okay, Andrew, Cullen, Jitesh, both trades are good. Okay, now Karen's understanding. Okay, one and two is good. Good. What is the best time frame for this? I personally prefer 1 hour. It gives me enough time to fool around and do whatever I want and come back and look at it only once an hour. But for those of you who are really aggressive and like to really stay on the market, 15 minutes is also good. A little bit choppy. Just watch the news, stay away from the news. Otherwise, if you want to ask me my personal preference, stick to 1 hour. Okay? Karen, there is always another trade. Yes, there is always another trade. Would rather be out of a trade wishing I was in than in a trade wishing I was out. Well said, well said. Ned, that's good advice. When in doubt, leave it. Yes. Wasim, are there any ideal pairs for this strategy? Ideal pairs for this strategy is all the pairs that have small spread. Okay, that makes it euro yen, euro USD, sometimes pound dollar. I believe those would be the tightest spreads. Okay, don't worry about the spreads. I'm going to teach you guys a technique on how you guys can take this into your favor, where you guys can maximize your profit. And many of you guys from my social network who trade with me every day in the chat room, you guys already know what I'm probably going to be bringing up here in terms of correlation. All right, so we've got 27 minutes to this webinar. Let's use time wisely and let's continue. Tony says, do you have an alert or a manual EA for the setup? That's a good point. We don't have any alerts for this, but there is an EA out there. In fact, maybe 3 EAs out there. I remember in 2010 and 2011, people emailing me saying that they wanted my permission to release an EA for this. So I know there are EAs out there for this, maybe on Forex Factory or forextsd.com, one of these two websites. Just need to look for it. And if you do find it, please post it onto our forums as well and share it with us. We'd love to show it on the next webinar and discuss it. In fact, one of our organizers in this room, Roy, who's also a member of our network, saying, I will be making one. So he's a programmer. He's going to be making one. So if you guys want, you guys can talk to him on our social network. He's a pretty nice guy. He's very friendly. So he's making one. Okay, so for those of you who are new, who do not know much about Forex, an EA is basically a robot that trades on your behalf for you. It's like automatic trading. It looks at the criterias that you give it and it trades for you. So that's pretty much an EA. So imagine doing all this hands-free. Okay? Although it is more fun watching it and doing it yourself. It's always fun. Okay, let's take a look at this one. Okay? Good trade or bad trade? Let me know. On naked charts, can we guess or track the entry of the strategy? No, you will not be able to. You need the MAs on this. How do you take profit? Okay, Valdemar, once we discuss this particular trade, we're going to go into take profits and stops. Cursor is stuck. Okay, let's reload the screen. I just turned it off. Just give it a few seconds. I will turn it back on. For those of you who are late, that's okay. I'm always late myself, so don't feel bad. I am recording this webinar, so it will be up on YouTube. in case you do miss the beginning part of this. But we're going to start getting into more advanced things. So we're going to give it another few more minutes while we discuss a couple more entries, and then we are going to go into the advanced take profit methods, where we can maximize profits and take 50 to 100 pips at a time rather than 5 to 10 pips. Okay, screen is up again. Everybody says yes, and my mouse is moving. Okay, Jared, is this strategy more profitable than your 10 pips a day strategy? Yes, it is more profitable. This is my second favorite strategy after my price action strategy. Those of you who are members of my premium website, forexwatchers.com, we use price action analysis. But if I were to give that up, then this would be the strategy I would be trading. Okay. So my pro trading strategy is obviously my number one strategy, but this would be my second best. Okay. Let's continue here. So yes, let's take a look at this one, this particular arrow. Is this a good trade? Okay, yes, yes, yes. If a candle goes, if the candle goes past the arrow, is that any part of the candle? No, just the close. Like these little long tails that you see, they can go as far as they want. That's not a problem. But this thing that's filled, the chunk red or the chunk of green, that is called the body. The body should not be on the outside. The tails can go as far as they want. Okay, now let me know if that makes sense, Speed. Karen says yes. Sonia says good. Jitesh says yes. Good trade. Very good. Andrew, yes, 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 yes. Okay, good job. Good job. Okay, this is a good trade. Okay, mark it. It retraced. We can see the MAs clearly. We can see through them. It is not congested. We had consecutive lower highs at 1, 2, 3, 4, even 5, and this would be our entry. Would end up being here. Okay, we would enter at the break of this tip, and we shot up. Okay. Okay. Not go past it. It just has to beat. It doesn't have to go past it. It just has to hit. Yes, as long as it touches the MA. Okay. It can go past it, but it should not close on the other side. For example, the body should not be on the other end. The tails can come out, no problem. Okay, yes, good trade. Karens have three towers touch the MAs. You don't need 3 towers to touch them. Even if you have just one touching the MA, that's fine. Okay, and Abhijit, no, as in you do not understand, or you do not agree that this is a good trade. Okay, just write down your question. I'll come back to that. Now, let's take a look here. Now, people ask me, I think Valdemar, you asked me, is take profits. You entered here, right? This is where you went long. For example, let's say you're trading one standard lot. You want to go long here. And you have your stops at the previous tip, which is right here. How many pips far away is that? Let's take it accuracy. We'll talk dollar amount, so it's a little bit easier to understand. 43 pips away. That means $430 away if you're trading one standard lot. If you trade a 1:1 ratio, you can go up for 43 pips, which means $430, which would have been achieved within the hour, maybe 15 to 45 minutes. Okay? So my interns usually trade this on a 1:1 ratio. Okay, I think if we Google it really quick, and I think it's Urban Tower Scalping Strategy.wordpress.com. It's a big mess. Urban Towers Scalping Strategy. Okay. Yes. If you just Google it, it should be the first result. You can see he's been documenting every trade that he takes for the longest time. He's no longer on there on WordPress anymore. He is now on our social network, and he's on a leave right now. So once he comes back, he'll be documenting again. He's on a vacation. So anyways, let's continue here. Where did we go? Yes, charts. Okay, so 1:1 ratio, Waldemar, to answer your question. Okay, your cursor is not moving again. Oh no. Okay, let me stop and restart it. Once we're done with this, we're going to go to today's date and see if there was any particular trades today that has happened or is going to happen right now as we speak. And then we'll go into some advanced methods, which has never been shared before on YouTube for this strategy. Okay, it's working now. Okay, great. What about pivot points? Should we look at it? You can. If you want to go for more precise exits, always use pivot points. Pivot points are the best thing ever. Okay, and if you do not know how to use pivot points properly, YouTube Pro Trading Strategy by Urban Forex. You guys will know how to use the pivot points very accurately, because what they teach you on the internet is useless. It's crap. So I think I can say crap on the internet. That's fine. Okay, but yeah, just you can YouTube Pro Trading Strategy by Urban Forex, and you guys will see how to use pivot points very accurately. They're very good for exiting trades. Okay, so that will help you maximize trades. Now, screens up. Everyone can see the screens now. Is it good? Just a white screen. I have a blank screen. Okay. No, 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 no. Okay. One more time. Let's do this again. Turn it off and on. Okay, and how many of you guys, while the screen is loading, how many of you guys are familiar with my pro trading strategy? Have you guys have you guys attended the webinars? Have you guys seen the videos? Are you guys following up with it? Karen, Naveen, try Omnivia for your webinars. They're not that bad. Okay, I will look into them. Omnovia, yeah. I will look into them. We'll give them a shot. Yes, yes, partly, yes, B, yes, very good. Okay, so we will be holding weekly webinars for pro trading strategies, because I do see there's a lot of people still behind in our chat rooms. We trade the strategy every day live in our chat rooms, in our network, and I do see a lot of questions. So I think I'm going to start holding weekly webinars for the pro trading strategy. Floyd, you have such a positive, cool attitude. Thank you, Floyd. We have to keep it that way, right? Again, analysts, we have a bad reputation for confusing people, but let's change the things around. Okay, Karen, I watched the video, but not having a lot of success with it. I'm trying to get the money together to become part of your premium group eventually. Yeah, take your time. There's no rush. The premium group is only there to pay for Urban Forex, to keep it alive. So if you guys are a part of the premium premium group on forexwatchers.com, you guys are obviously doing a lot of pips, especially for this month. So anyways, leaving that aside, let's continue here. Screen is still blank for you, Theory. Everybody else is okay? Bead, back, screen's up. Okay, Theory, just see if it comes up, otherwise try relogging in. What is the approximate win to loss ratio for Urban Towers? A win to loss, I would say you should have approximately, from 10 trades, you should have 7 to 8 winners. And the losers that you have should be small, shouldn't be too big, because your stops would be usually tight. Okay, screen's up. Okay. Everybody has a yes. Let us continue here. Okay. Now, we discussed that this is our entry area for this particular trade. Let me put an arrow on it. This was our stop, which was the lowest tip. And you can see our stop was how many pips away? 43 pips away. So that means if we use a 1:1 ratio, we can go for a 43 pips of take profit. So on a standard lot, that would mean $430, which would be achieved in a matter of an hour on this particular trade. Sometimes it takes a couple of hours to reach that level. Okay, now Ula Mara, okay, thank you. Ned, Abhijit. Okay, that's a good compliment right there. Okay. All right. Now looking at this. Now if we go up 43 pips. Now let me put the lines on here. Now how many candles did we have to look at to take this trade? We took the entry candle. We took 1, 2, 3, 4 candles previously to determine how many towers we have. We took 4 candles, right? So if you enter a trade, we looked at 4 candles in the past, which means 4 hours worth of data. Can we keep the trade running for the rest of the day? Okay. The answer is no. If the trade is not going in your favor, for example, it did not touch your take profit, but you are in profit, people choose to hold. If the trade is just minus 5 pips, but it did not touch your stop, people choose to hold. How long do you hold? Okay? Do not hold very, very long. It is very dangerous. Only hold as far as your analysis goes back. We've looked at 4 candles in the past. You can hold your trade only for 4 candles in the future. Okay? Maximum 5. But past that, you are gambling. You are no longer in the analysis zone. It becomes a gamble. Okay? So just keep that in mind. Okay? Okay, how tight do the lines have to be to the MA before the trade is no good? The moment, wait, Steve, can you repeat that again? How tight do the lines have to be in the MA before? Oh, okay, you're talking about the congestion. Okay, let's take a look at a congested area. Okay, can you actually look through all of these MAs? Can you look in between all of them and see black space? You can see them, right? Now, in this particular area right here, okay, let me put an arrow there. You cannot see them through. You can see the first 2 MAs are touched together. Okay, that's the congested area. It's too tight. You can't look through them. Same case goes here. It's too tight. Okay, you need them open like this. Okay, so just keep that in mind. Okay, great. Now, let's get into some advanced methods. This is where the fun begins. Let's take a look at today first and see if we have any potentials. Today on Euro USD, any trades, yes or no? I'm going to ask you guys. Okay, let's move them out here. Let's show you my screen. Any trades, yes or no for today on Euro USD? No, Karen. Very good. Pound. Any trades? No, Mihaly. Very good. Okay, US dollar CAD. Any trades today? Andrew says yes. Karen, no. Ned, no. Mihaly, no. Okay. Now, the reason why you probably said yes, Andrew, is right here. You see that touch right there? 3 consecutive, and the market goes up. Try not to look at the market going up. We at that very moment when this trade actually came to existence, we didn't see the market. So as of right now, all you need to do is look at the MAs. It's too congested. But once we look in the future, yeah, obviously we know that it's a nice trade. It went in our favor, but try to look at it as realistic as possible. Okay, so it's no trade because the trades are congested. Again, these rules are very important, and once you guys have this on YouTube, or if you guys want to take a screenshot or write this down, you guys are welcome to do that. So let's move on. Let's take a look at US dollar Swiss franc. Any trades today? No. Okay, good. Aussie dollar. Any trades? Yes, yes, no. Yes, yes, yes. Okay, good. Those of you who guys said yes, very, very good. Let's take a look at this. We have a very beautiful trade on Aussie dollar that happened today. And Perry says yes also. Even our organizer is excited now. Okay, great. Let's take a look at this now. Right here is where we have our first touch. Okay? Oh, sorry. Beat Beat says great country. Yes, okay, well, so we'll work on the great country's currency pair right now. Now, let's take a look at Aussie dollar right here. Okay, we have our first touch right here. What things do we need to check? Is it congested? No, we can see through clearly. Check. Do we have our towers? And we're in an uptrend, so we're going to look for higher lows. We have 1, we have 2, we have 3. Check. Okay. Did we close outside of the MA onto this side? No. Check. All criteria match. We place our entry right here. The next candle opens. We place our stop right there. Now, how many pips away is our stop? 24 pips away. 24 pips in our favor would mean approximately $240. Or let's just say we're a small trader. We're trading with one mini lot. Okay, 24 pips would mean how many dollars in a mini lot? $24. Okay, the average person in this room cannot survive on $24 a day. That's Starbucks money. You know, there's no way. $24 a day would be okay for me. Actually, I'm in China, but for a lot of you guys in Europe and the US and in the States, it's not possible. So what happens when you're trading a small amount, like one mini lot, and you get $24? You made profit, but it's not enough. What happens then? Your psychology kicks in, and you want more, and that more can ruin things. Okay. Now, there is a way to control that by correlation. When you do correlation, I'm going to teach you guys how to maximize profit and book so much profit that this same trade will get you $200, $300 or more, and at the same time you will be satisfied. Okay, now we'll go through that. Now, Karen, would the MAs not have been too congested? No, because maybe from your screen you're not able to see. It's not as clear, but you can easily see through all the MAs. There's enough black space between each MA. None of them are touching together. Okay, Karen, I am in Aussie land. Okay, great. That's great. I really want to visit there one day, so we'll see how it goes, and maybe I make a trip out there. And New Zealand, because we have another member there and nearby, named Brian. Okay, B, the 3 towers congested only when you zoom out. Okay, we'll take a look at that. And Abhijit, now I understand the strategy. Okay, very good. Karen, nope, I would starve and the bank would only take my house. Okay, yeah, so $24 is not worth it. Now let's go through let's go through our correlation methods. Now, guys, write this down. Okay, I'm gonna put this up for you. Euro USD, pound dollar. Okay, Australian dollar US dollar, New Zealand dollar US dollar, euro yen, sometimes even gold. Okay. The pairs above this line work together. The pairs below this line work opposite. So, Aussie dollar we're gonna sell. That means we can sell all of this. Okay, now you remember, Andrew, when we looked at US dollar CAD at that very same time, and you said that there was a trade, but we said no, there's not a trade because of congestion. Tell you what, in this particular case now that we're looking at correlation, this is a win. Why? Because Aussie dollar, we have a sell. What does that mean? Aussie dollar is a sell, means opposite on these two pairs, which would mean buy on these two pairs. Now, we have a touch on US dollar CAD. We have a touch on Aussie dollar. Let's take a look further down. New Zealand dollar. No touch, but the market did go in the same direction. Euro yen. Okay. What time was this? Let's put this all together. We have a sell at 4 o'clock. Euro yen. Let's take a look at 4 o'clock on my screen. Okay, we have a small sell, not too much. Okay, so profit there as well. Gold, 4 o'clock. Let's take a look. 4 o'clock. Sharp drop as well. So let's say the average one, let's take a look at gold. Okay, 59 pips on gold. Euro yen, how many pips on euro yen drop on average? 14. Okay, New Zealand dollar dropped a big chunk itself, more than 40, 50 pips. So let's say Aussie dollar was your only pair that gave you a perfect formation. You're looking at Aussie dollar only, and you do 1:1 ratio. The moment Aussie dollar closes, all of these pairs you must close. Always follow the perfect one. But by the time you close all of these pairs, you are no longer standing at 24 pips, but you are rather standing at probably 200. Does that make sense to everybody? Okay. Okay, great, great. So that's the main thing right now is it's not that you want to increase lot size for this, but you want to increase pips, because when you have your analysis correct, increasing pips is a piece of cake. But if you increase your lot size, you're trading on one pair, you're increasing risk at the same time. Okay? So be very careful with that. Okay. Now, we are approaching 6:30 p.m. Eastern Standard Time, which means the close of the webinar. Should we do one more example before we close it? And should we do it with correlation? Okay? Okay, yes, yes, yes. Okay, we're going to do one more example, and this time I'm going to have you guys look at this, okay? I'm going to go back a few days. Let's take any random pair. Okay, give me a random pair, guys. Which pair you guys want to look at? I'm not going to pick and choose. I'm going to let you guys pick. Okay, Karen says pound dollar. Okay, we'll use pound dollar. Okay, somebody give me a random date in March, for example. Okay, Andrew says the 12th. March 12th, pound dollar. Let's take a look. Okay, let's go to March 12th. March 12th is here. Any trades on March 12th for pound? No. Okay, beat, very good. Let's take a look at Euro USD on March 12th. Any trades on Euro USD March 12th? Andrew says no. Good. US dollar CAD March 12th. Take a look. Any trades here? Okay, Mihaly says no. Swiss franc, March 12th. Any trades there? Let's take a look. No. Aussie dollar, March 12th. Any trades there? Okay. Okay, nothing there. New Zealand dollar, March 12th. Let's take a look at that. Nothing here. Euro yen, March 12th. Any trades here? Karen says March 12th was a Monday that would make much of a difference to opportunities. Naveen trying doing this on a Monday. No, that's not the case, Karen. There's always a trade. There's always a trade. Ned, no. Bede, this is the second method I have seen you talking about. It seems based on similar principles. There seems to be a rationale behind what you're doing this. Is this right? Yes. I always try to bring out the point of seeing the market as a whole, rather than trading one pair at a time, adding a million indicators on it, trying to find the golden trail. It's not going to work. I try to train everyone to look at it, look at the market as a whole, to understand what is going on in the market. Turn off the TV, turn off the news. You don't need to watch that. It's really useless. But coming back to Euro Yen, is there a trade on the 12th? Valdemar says yes. Yes, yes. Okay, there's a trade on Euro Yen on the 12th. Let's see. Do we have a trade now? Let's take a look. I see a pair right here. Okay, we are outside our zone now. We have now touched it. Is it congested? No. Do we have three towers? We have a low, higher low, higher low. That makes it three. Check, check, check. Have we closed outside onto the other side? No. Keep our entries at the tip of this. Our stop over here at the tip of that. What is our 17 pips is our risk, and we've touched 17 pips just on target, 1:1 ratio. Okay, 17 is to 17. Now, it did even hit it further down 3 hours later. It did also hit even further up to 22 pips without hitting our stop. So you're gonna get the profit regardless. Now, the only thing is 17 pips, $170 or $17. Not much. Let's take a look at the timings. Let's do the correlation for this. At 7 p.m. we short Euro Yen. Okay? Sell at 7. Okay, 700 hours. So if we sell on Euro Yen, does that mean we sell on US dollar Swiss franc and US dollar CAD? No, we buy. Good, good. Okay, just checking if you guys are sleeping or paying attention. Good, good. Okay. Okay, so let's take a look. We're going to sell everything at 7. Okay, Euro USD, 12 o'clock. 7 o'clock on the 12th. 7, sell. Did the candle go down? Yes. Pound, same day at 7. Okay, a short move only, possibly a loss because of spread, no problem, continue. CAD, 7. We're going to go long at 7 on CAD. Okay, spread, lost, right there. Swiss franc, 7. Gonna go long. 7. A decent rise. Aussie dollar, 7. We're gonna sell. A decent drop. New Zealand dollar, 7. We're gonna sell. Decent drop. Euro yen, we already know. Gold, 7 on the 12th. Let's go back to the 12th. At 7, we sell. Minor drop. So, putting this all together, would you have made 300 pips off of this one? No. But would you have made more than 17 pips? Yeah? So, when you have your analysis right, you're doing everything you have to do, you put everything together, you put in correlation, you add on profit, do not ever doubt yourself. Okay? That's one major thing. Once you enter a trade, stick to it completely till the end. Even if it gives you a loss, doesn't matter. Stick with it. And then the next trade, continue the same method which you used on that losing trade. Do not modify any methods. Do not jump a strategy. Do not change the way you think whatsoever. Okay? All strategies work to a certain extent as long as there's not so much indicators on the screen. If it's a price action based strategy, all strategies work. Add correlation to it, add a winning probability to it, you will not lose. Okay? It is just the psychology that's involved with it that makes a person lose. Okay? Where do we put the stop loss on the other pairs, not on the ones we did? There's no need to put a stop loss on any other pairs. Treat the whole trade as one. You put the stop loss and take profit only on the pair that's perfect. For in this case, euro yen. Once euro yen touches its stop or take profit, exit everything. Okay? Treat the trade as one. Okay? Okay, Karen, same question for you. No, I just answered that question. I think I answered your question too. Bede, what about not risking more than 2% of the bank? That's still the case. Do not risk more than 2%. That is what is taught to us in the books. You guys can follow that, but 2% really not much people follow. Okay, I'm not saying that I don't follow it. I do follow it, but not many people follow it because of the mentality. Some people have a $2,000 account, and when they're trading a 2% risk, they end up, just increasing lot size because it's the amount that you get on a return is just not enough comparing to what you are used to on a day-to-day basis. If you're spending $100 a day by going out, whether you're eating McDonald's or you're eating at Olive Garden or you're out partying, if you're not making at least that much, you're not going to be happy with trading, because when people start trading Forex, they come in with an expectation to replace their job or to replace some sort of pocket money on a day-to-day basis, which is the reason why many people fail. They don't treat it like an investment. So this will help you do that. Once you add in correlation, this will help you increase profits at least and keep your mind satisfied with the same analysis. There's no extra analysis. There's no sitting on your screen for another 20 hours a day. Okay? You find one trade, you add correlation, and you're good to go. Okay? Use correlation on 1 hour only, or 15 minutes, or 30 minutes. You guys can use correlation on any amount of time frame you want, but a 1 hour time frame is ideal because every day there is a new fundamental watches in terms of the market. Every day there's new paperwork, but there is not new paperwork every 15 minutes or 30 minutes. The 1 hour chart will filter the news. So 1 hour chart is ideal. 4 hour charts is not worth it because there's only, 8 of those in a day. So it's not worth it to do the 4 hour charts. Okay. Jared, how did you decide your take profit? 1:1 ratio. If your stop is 17 pips away, your take profit 17 pips away. The moment any of those touch, exit everything. Okay. Bede, yes. Build slowly. Build skills, yes. Karen, thank you so much. It's simple strategy and I understand. You're very welcome. I'm glad you understood that. Can we trade crosses? Yes, you guys can trade crosses as long as the spreads are not too big. What are the exit rules? The exit rules, obviously, once you exit the perfect trade, you exit everything else. Jared, thank you, thank you. All right, guys, so time is up now. We are past by 11 minutes. I have to shut down this webinar. I thank you all for attending, and we will have this video up on YouTube shortly. And for those of you who are not a member of our social network, please do join our network. It is urbanforex.ning.com. I am there every day. We have a chat room running, and I actually trade with all the members every day. We try to average anywhere between 100 to 200 pips a day. So look forward to seeing you guys in the chat room as well. Thanks a lot for attending. Take care, guys. Wasim, you asked me, is there any ideal time for this strategy? No, there is no ideal time. You can actually trade this at any hours. That's fine. You're very welcome, Wasim. Take care.